believe me, just watch.
We're back on the Morning Brew with friends. I love seeing you in the white coat 1 second and then in your regular clothes today.
My summer
today,
look,
right?
yeah.
I think that was the seersucker coat you were wearing.
Seersucker, yes.
It was beautiful. Well, there's a lot of stuff going on in the mortgage market this week. I think people are really talking about moving like towards the holidays. This is not necessarily the busy time though for you guys, right?
Well, it's not. People like to kind of hunker down and stay in their homes, you know, starting at Thanksgiving through Christmas. Nobody likes to be moving at that time. But a lot of people do move.
Right.
People don't like to be moving at that time, but a lot of people do move.
Yeah.
Where we see the slowdown is in new loan applications during this period of time. People aren't out looking and signing contracts. So November and December will be down months, but we've just finished some big up months. I mean, we've had a couple months where over 1,000 homes have sold.
That's in the city.
In the city.
Not just with Frost Mortgage, but in
No,
the city.
It's 1,000 homes in
That's
the city.
huge.
Yeah.
That sounds like an uptick.
It was
For
an
me,
uptick.
it sounds like a
It's
pretty
been
big.
an uptick over several years, and there were a couple of months where they topped 1,000. Now they're dropping back down, and
Is
800,
that
700.
where were we like pre-recession? Are we close to those numbers yet?
No. In the real hot market, 2007, 1,500
Oh wow.
houses per month.
So we're
selling.
still a third down.
We're a third below that.
Yeah. Well, that was inflated for other reasons. I think people were buying homes they couldn't afford. And
Well, and there were speculation going on. It wasn't just single-family dwellings that people were buying to move into and raise their families. There was a lot of speculation with people coming into the market, buying houses and rehabilitating them and selling them, and or just buying them and selling them, and there was a lot of
Flipping
that
them.
action going on.
Yeah.
Flips, I didn't want to use that vernacular because everybody may not know what that means.
Yeah.
But buy today, sell in 60 days, 90 days, and churn it. And there was a lot of that.
People didn't move into the house; they just
No,
bought
they
it,
didn't.
refurbished it.
And that was a couple hundred a month probably. So
Wow. Yeah, that's pretty amazing. So I know that since we're getting close to the end of the year, I don't even know. Is there a tax penalty or anything, tax advantages of buying a home near the end of the year?
Not
Or
really.
does it really matter?
No. It's the tax advantage for buying a home is the interest credit that you get.
Right.
And the taxes, property taxes. You get a property tax credit. So those are kind of annual things. So there's no real timing issues on buying a house.
That makes it easy. So what is happening now in Albuquerque? You think that our real estate sales are so strong and picking up?
Well, it's just a function of demand. We had good, strong demand in the summertime, and it's carried over into the fall a little bit.
Is that because people have more money, you think?
I think there was pent-up demand. I think because the previous couple of years it was very low sales, and there was pent-up demand, and some of it came to fruition. The economy stabilized, interest rates continued to be low. People said, all right, I trust that things are going to at least stay as good as they are now. Let's go buy that house.
Right. So you think people are now, what's going on with the reverse mortgage thing? I know that because some of those homes, not everybody's moving into a bigger house, right?
Right. A lot of people are downsizing.
Right.
And they're selling their homes. They're taking the equity out of their homes. If they're over 62 years of age, they're putting half down on a newer, smaller home. And they have
Saving
no
a
mortgage,
ton of money.
saving a lot of money, and have no mortgage payment for the rest of their lives. It's a real good loan program. Most people think about the reverse mortgage as a refinance vehicle.
Right.
But actually, for seniors like myself, you sell a bigger house, you buy a smaller house, you take the equity that you got out of selling the bigger house, you put it down on the smaller house, and if you put 50% or more down, you have no mortgage payment for the rest of your life.
That's huge.
Well, it's very big because the mortgage payment is typically the largest bill everybody writes. So you eliminate every month. You eliminate that bill, and life gets a little easier.
No doubt.
Yeah.
Absolutely. That sounds pretty amazing. I hear the radio ads and you see the TV ads about reverse mortgages.
Right.
And I was like, that doesn't make a lot of sense in some ways. It does in others, It seems like the way they're presenting it seems to make a little confusing.
Well,
but basically,
it, they present it kind of a flashy thing, but really it's a solid economic decision. It's forward planning financially for seniors.
Yeah.
And you get to be. I'm 66. Okay. I'm no longer in my peak earning years. My peak earning years were 10 years ago.
Do you think you're going to live to 96?
No, and I don't want to. If I continue to deteriorate like I have the last 10 years, I don't think so. No, but I think what's interesting in the marketplace right now is that the inventory of homes for sale has declined tremendously. Okay, they've sold off inventory. So the people that are still wanting to sell their house are wanting to sell their house.
Right.
So it's a good time to buy.
That sounds good. So what's the maximum, how much money can you borrow on a reverse mortgage?
You can borrow, at age 62, you can borrow 1/2 of the purchase price of the house, or 1/2 of the appraised value of the house. 1/2. And the older you get, the more you can borrow. And you can get it close to 55, 56%.
That sounds
as you
pretty
get older.
good.
Yeah, no, it's really good.
Yeah.
It's really good.
And are those insured through FHA like a regular
And
every
that's
other
the beauty.
mortgage?
And that's what's so misunderstood. So many people, because of the Robert Wagners and the Fonzies that are out there selling the things. And people
Get your reverse mortgage
Yeah, exactly.
now.
People are suspect, you know.
Right.
It's an FHA insured home equity line of credit. That's what the loan is.
Right.
It's insured by the federal government. It was started by Ronald Reagan to provide financial stability for seniors, and of course Ronald was a senior at the time he was president, so he had a pension for seniors, and this is something great that he put into play for us.
Right, and it's been a thing that just kind of, it was under the radar until just a few years ago, I think. People didn't know about it.
Yeah, the advertising campaign started about 5 years ago.
Yeah,
right.
yeah.
And that's why everybody became aware of it.
Right.
But it's been around since the 80s.
Right. So what's going on with the mortgage rate increase? I know I ask you this every Monday morning.
Well, and as you
mortgage
should.
rate, what is going on?
As you should, because it's a timely topic. You've noticed, if we have the chart up, I don't know if we're going to put
Yeah, I think
the
we had
chart
it a
up.
second ago.
Okay, the chart shows that
There
we've
we
gone
go.
up a little bit. We're no longer 3 7/8 across the board.
It's
Still are on
already-
VA.
Yeah.
And that's partly because for Frost Mortgage, we charge no lender closing costs to veterans. So we're still below 4. But the others are at 4, a little above 4. So what's happened, and we talked about this last week, is the market has already factored in a potential Fed rate increase. And so the bond market that drives mortgage interest rates has factored that in.
And bonds and stocks are kind of like, they're balances, right?
You watch the market, if you're watching out there, when the stock market is up, okay, interest rates are down. When the stock market is down, interest rates are up. They work inversely to the market.
Right.
Okay.
And it's because basically the cost of money in one becomes more
Money
valuable
flows
than
from
the other.
one place to another.
Right.
And so when it goes out of bonds, bonds become more expensive, and it flows into the market. People are taking their money out of bonds.
Right.
And that's why interest rates rise. So the Fed has got people feeling that they're really serious about a rate increase. I continue to say no.
You think you're thinking maybe March of next year?
I'm thinking March of next year.
And
I
I'm
don't believe
thinking
it'll
December
happen.
of this year.
I know you are.
I don't know what
so
the
we'll see.
over-under is.
Maybe we'll put a lunch bet on it. Or
That
something
sounds like a plan.
That. You and I both enjoy our lunch.
That sounds. We'll go to you were telling me about the nice lunch you had at Nick and Jimmy's over the weekend.
Great Sunday pre-fee menu at Nick and Jimmy's.
We'll check that out.
Yeah.
Yeah. Well, we'll be back in a couple of seconds. We're going to talk about one of my favorite things, coffee on the Morning Brew with Friends.